So let me move to charitable institutions, right? So charitable institution, there are some loopholes have been plugged, right? So what has happened is that if a donation passes through several charitable institutions, right? So 15% 15% accumulation is done at each level, right? So how does it work? That if charitable institution gets 100 rupees, right? So they can it can save 15% and spend 85%, right? So this is the current law, right? So if this 100 rupees passes to different charitable institutions, right, and each save 15%, so the amount that is required to be spent gets reduced uh, substantially, right? So if you take this example, so if charitable institution get 100 rupees as donation and it saves 15 rupees and give 85 to B, right? And then B saves 15%, which is 12 rupees 75 paisa, and give 72 rupees to C. Similarly, C saves 10%, and at D level, D is required to spend only 52 rupees, right? So this was a loophole there in the law, right? It has been plugged now. So what it says is that the intermediary charitable institution shall not be eligible to accumulate this 15%, right? So in this case, this institution A is required to pass 100% to B. So it won't get the deduction for 15% if it passes the donation directly to the other charitable institution. So this is a provision where this loophole has been plugged. Next is important point for the professionals, so that people don't miss that this form 9A and 10 is to be filed 2 months prior to the filing of tax return. So what is this section? What is this form 9A and 10? So basically, if the charitable institution is not able to spend the money within the year, they can accumulate it for 1 year or 5 year under respective sections of respective clauses of section 11, right? So they are required to file this form 9 or 9A, depending on what kind of what clause you are using to accumulate the income, right? So what happens is that today this form 9A and 10 is required to be filed along with the return, but before and after the tax audit is done, right? So tax auditor faces problem that it is saying that company has claimed has accumulated income, whereas the company has not filed its form yet. So what has been proposed now is that this form 9A and 10 is required to be filed before 1 month before the tax audit. So if the due date for tax return is 30th September, right, tax audit has to be done by 31st August, and like 1 month prior, which is 31st July. So form 9A and 10 is required to be filed by 31st July. So every professional has to take care that these forms are filed before 31st July.
Welcome to Complinity Technologies. Complinity is India's leading governance, risk and compliance software helping companies to manage their compliance, contracts, litigation, legal updates, inter-financial controls and more. Complinity is a one-stop shop for all GRC needs. With our proprietary 12 GRC modules and real-time legal updates on 2,000 plus laws and 24,000 plus compliances, all in an integrated platform that is easy to use with automated alerts and risk management capabilities, is why compliance managers, general counsels and chief financial officers choose Complinity every time. Join the most innovative and prestigious brands that use Complinity. Automating your compliance management. Request a demo at complinity.com.